we've had a good week behind us. 4% on the Nifty, 6-7% for the small and the mid cap indices. Are we likely to build on that?
Probability is high that we build on that because still the negativity prevails and the rally which has come about has taken a lot of people by surprise. And many people, investors domestically at least, resorted to what is also called loss harvesting, where they thought that since they don't want to pay tax this year, so they sold off equities in the for saving tax, capital gains tax for this year in the hope of buying them cheaper. Many of them will are now sitting on cash and markets have rallied. So I think fundamentally also, if you see the triple move which we have seen is very rare. Stock markets moving up, bonds moving up, i.e. bonds yield moving down, and the rupee moving up, all three happening together. I think that by itself is a good macroeconomic indicator. Now, the only small risk which remains is what happens on 2nd April with regards to tariffs, because from India's perspective specifically, if only the exports, the net balance gets targeted, then the impact could be lower. But then they are talking of specific US companies being targeted because of high GST and all. So that's can take into internal policies. So how that plays out, we have to see. So that will create some near-term uncertainty, but directionally, I think things look okay.
Sandip, hi, morning. What is it that you're making of the entire power sector right now? Demand clearly has picked up in the month of February, continues to climb in March as well. The shortages were pretty much negligible, and there is a lot of capacity addition as well, which is currently underway on the sidelines. Anything that you're liking within the power sector?
The power as a sector, in terms of if you are talking about generating companies, the utilities, tends to be a low ROE business. So if you look at the return ratios of most of these companies, they are in single digits or very low double digits in some cases, most cases single digits. So I think we cannot give them very high valuations given the political risk, regulatory risk, etc. around tariffs and all also. But like you rightly said, given that relatively harsh summer is predicted, temperatures have started rising early. So near-term demand uptick is most likely, which could benefit the merchant power suppliers for the next few months, and companies like IEX also could benefit because of higher price trading unit trading charges, higher number of amount of trading, etc. I think near term, it does represent a trading bet. I would say a short-term investment bet for investors.
Okay, power in a sense is charged up, but folks, you have to remember that power is not like an easy word. I mean, it looks power, but there is energy transmission, there is energy generation, there is energy distribution, there is energy financing, there is rural, there is there is renewable, there is the traditional companies like NTPC which are still thermal based. So when you look at power, you need to understand that what end of the power looks appealing. My sense is the demand for power generation will come back. The demand for power generation, which was low, if summers are there, demand will come back. B, states have not also signed, when I say states, DISCOMs have also not signed a lot of PPAs. That also should pick up. Why? Because a lot of yes and no, power demand was down, so states become reluctant. Now that BJP has got more states under their wing, so to speak, at least in terms of the ruling states, that synchronization would come back. And C, when interest rates they come down, utilities they tend to do well. Very simple mathematics. So demand, macro, government commitment, bank funding, all these factors really could be at play. So if we spend a minute on power more, Sandeep, there is power generation, there is power transmission, there is power financing, there is power mechanicals, meter company, transformer company, wire company. Which end of the power is the best one to invest in?
I think the suppliers tend to be the best one because transmission expansion both in India and globally is happening at a rapid pace because a lot of the renewable additions require much more transmission investments. So I think the transmission equipment company, the transformer companies look the best placed, I would say, on a directional basis. Then you talked of the meter companies. So many of the meter companies also have been, because of the move towards smart meters, many of these companies also have been doing well. But the competitive intensity because from new players has also been increasing. But then the overall opportunity size is pretty strong. Generating companies, I'm always skeptical because the investment they do are huge. Return ratios tend to be very low. So I think at most they would present trading bets or yeah, there has been a cycle of re-rating where many of these stocks have moved up. Further re-rating looks tough for me.
Sandeep, what's the view on the entire realty pack? And we were just talking about the antique note on DLF. They're saying that the pre-sales growth is expected to be modest going forward, and that the company is focused on growth through its existing land bank with no need for new acquisition. Saying that they have strong visibility for the next few years, and it is a structural story. But in the near term, they do think that sales perhaps are going to peter down a little bit. Sandeep, your thoughts on real estate and DLF, of course, in particular?
Yeah, so real estate has had a 3-4 years of strong run. Now I think from all data which has been coming about, and that's what I also talked of for the last 3-4 months, that sales seem to be petering down. Pre-sales also are moderating. The price increases which these companies were able to do, that is no longer happening. So I think there has to be a phase of consolidation in the real estate sector because if you see, real estate demand stood up when many of the other sectors actually saw a decline in demand. So I think there's only so much of high-priced real estate which can be sold uh, in a macroeconomic scenario where the growth is not actually very aggressive and people's incomes are not rising very rapidly. I would think that real estate for this year, I would still see should be a phase of consolidation overall rather than significant upside in most of these real estate companies, including DLF.
Okay. If real estate slows down and if DLF is the largest company, then impact on other real estate stocks could be there. So there could be a rub-off effect which clearly would be there. But the story for me today, I think, is that we are starting gap up on the Nifty. And this entire FOMO crowd which said अरे ये क्या हो गया, market कैसे बढ़ गया, हमको तो लग रहा था market खराब है, bear market has started. This whole proponents of the word bear market, they've got eggs on their faces now, and I'm saying this with a lot of respect and with a lot of sincerity. I'm not trying to call out that who got it wrong, who got it right, but typically when you see this kind of an comeback, when it comes, and when this comeback comes because of short covering, it comes at a time when macros, they are turning favorable for you, they're coming at a time when suddenly FI selling becomes FI buying, it tends to make you repent your cash call, or it will force you to come back in. So I think what we've seen is the first leg of the rally, which is short covering. Now comes the long part. And Sandeep, we've discussed it in your first comments. But I want to take this point forward and say that markets are a cycle. Extreme pessimism, markets will go up, nobody will believe it. Then comes the participation phase, and then comes the overbought phase. Are we now entering what could be called as the participation phase, and the market, before it peaks out, it has to go to overbought positions? And that could be 1,000 point on the Nifty, that could be 1,500 point on the Nifty, that could be 500 point on the Nifty also.
Yeah, the participation will come back, and I think so many people was expecting that domestic investors into mutual funds will suddenly stop investing, they'll have net and outflows, and a lot of people were making their bets on that FIs are selling, domestic investors overall will start selling and markets will crash. I don't think that's going to happen. I think equity investing through the SIP route is now a trend sort of among young professionals, etc., at least, and that is not going to stop. So I think it's a part of asset allocation. Many of these people don't look at their values every day, which people think they do. Actually, they don't. So I think domestic, so the flows on a net basis could vary. Last year, few very good months, we saw 45,000 crores of net inflows into mutual funds also. So maybe that comes down to 25,000 crores for a couple of months, but still that's a net inflow. On top of that, if due to improved macroeconomics, better valuations, foreign investors start allocating back to emerging markets, including India. So that's the added thing which will happen. So all new moves in the market start as short covering rallies. So people always think it's a short covering rally. It'll go up, then it'll come back again. Now the jury is still out whether that will happen. I would think that I would not be negative directionally. So maybe markets move up 2,000-3,000 points, then obviously they'll have to give up some of their gains. Because that's how the markets move. They move up, then some gains are given up, and then they move up further. So I would think we will start that kind of cycle rather than this being just a short covering rally and then markets again crashing.
If you like this video, then like, share and subscribe to ET Now.